What's going on, guys? Bryant here. Today is Wednesday, August 21st, 2024. If you're new to this YouTube channel, I highly suggest you press the subscription button down below and turn on the notification bell so you can be notified anytime I release a new video, as each video has been packed with so much information. In today's video, we're going to focus in on price action and identifying really clean trades by taking a look at the data that you guys have seen that I like to share frequently. A major edge that I use as a trader is gamma exposure. So as usual, we'll take a look at the gamma exposure profile. If you don't know what gamma exposure is or how to trade using it, I have a link in the description down below to a playlist in which I have a lot of videos demonstrating all sorts of examples. This summer, I've been putting out a lot of daily recap videos in which we go back and take a look at the gamma exposure earlier in the day, and then we see how price action played out. We are also going to take a look at a playback of the Quant Trading App SPX Trade Engine graph, and we'll see how all the data comes together on this one screen here. I'm going to share a trade in which I took here today. It was a broken wing butterfly on the E-mini futures. Now let's get started by analyzing the SPX. This is a 15-minute time frame. All of the levels and the zones that you see on this chart are coming from the Quant Trading App scripts. So if I came into studies, I'm just demonstrating what's on this chart. The SPX has no VWAP, but everything else is the Quant Trading App intraday and weekly levels. So if I turned off my studies, you guys will see this is a clean chart, and all of these levels are provided from Quant Trading App. Link is in the description to Quant Trading App if you are interested. These scripts are generated on a weekly basis as well as an intraday basis. So this level in this zone that you see right here was generated from the scripts that was created on Sunday. So at the start of the week, we are aware of where the markets will potentially have some sort of a reversal. Usually, if there's enough strength in the markets and we get a clean break of this level with momentum, whenever it retraces back to the zone, we usually get a bounce for a continuation in the direction of the momentum. For a day like today, we have a double confluence of the intraday zone. If I were to turn off the weekly script, just so you guys can see, the code for this script is copy and pasted from pre-markets. This is it right here for the Quant Trading App members. It's under the Think or Swim tab. This is our intraday levels. We click this right here. If you trade the SPX, you will also want to copy this right here. And then you come over to your chart, you press studies, come to edit studies. All you have to do is just double click on the scroll. If it's the index, delete, paste, you press apply, okay, and then you have these levels automatically plotted on your charts. This strike right here is the absolute gamma strike for Friday's expiration. That was calculated from pre-markets, and this is our highest positive gamma strike for the Friday expiration. The level all the way down here, this dash blue level, is our max pain for Friday expiration, and then this is our highest negative gamma strike for the Friday expiration. So we are already getting some of the very important gamma exposure levels for the week. Jumping right ahead, you guys already see the significance of the 5600 strike and what happened here for today. This is our intraday zone, which is also being populated from that same script. So this one script is already providing a lot of context for price action for today. I'm going to turn back on the weekly script. So come back up to my studies. Just going to turn this on for now because I want to showcase to you guys some of the other major components of the market, such as the SPY. So this is the SPX. This is the SPY, which is another derivative of the S&P 500. We can see right here, this is our rejection right at the intraday zone. We will get to the gamma exposure later in this video, but I think it's pretty important to showcase to you guys the simplicity of a lot of this information coming straight from these scripts that are being copied and pasted. This is providing a decent inflection point for us right here. We are already aware of what might happen with price around these levels. Look at these clean rejections. This is our 2-day anchored VWAP, which is also part of that script. So even without applying my own technical analysis, let's just say I'm not drawing my own trend lines on the chart, these proprietary studies that come from Quant Trading App can save so much time. If we head over to the Qs, let's see what happened in the NASDAQ here for today. We also rejected right at the intraday script. We ended up bouncing at the absolute gamma strike for the Friday expiration of 480. We can see how price traded around the 2-day anchored VWAP. If we head over to the IWM, what did we have that happened here today? The classic setup of a downtrend. I've done many videos on this YouTube channel about this, followed by a gap up, and then we get a pull into the 2-day anchored VWAP during the morning session. In this case here, we have the 2-day anchored VWAP, we have the absolute gamma strike for the Friday expiration, and then we have the Quant Trading App intraday zone here. So all of these important levels come together to create a potential zone in which the IWM will bounce off of. In this case, it ended up bouncing. It is also a gap fill. This is yesterday's close. So we have the previous day's close. We have absolute gamma. We have the 2-day anchored VWAP. We have the intraday zone. We have a setup in which it is a downtrend followed by a gap up. I've done quite a few videos on this YouTube channel around the 2-day anchored VWAP, around this exact setup. The 2-day anchored VWAP in itself is pretty powerful. When you layer all of this context on top of your chart, you get an area in which you can take a trade off of that can provide, usually for a 0 DTE scalp, anywhere from 40 to 80 upwards to 100% return. And on a day like today, the trade played out in under 45 minutes, so this is excellent. My focus is predominantly the S&P 500. The reason I say the S&P 500 and not the SPX is because I monitor the SPX, the SPY, the E-mini futures collectively, as well as the VIX, as I use as a proxy for implied volatility. I'm not just looking at the SPX throughout the day. I think it is important for a trader that trades SPX options to also have the SPY on your chart. The SPY can also provide a valuable edge. The same thing if you are a futures trader. Let's just say you trade the MES or the ES. Being able to analyze the SPY, I think, is something that's very important. So far, we have addressed multiple data points on this chart. We have the Quant Trading App weekly level. We have the Quant Trading App intraday level. We have an absolute gamma strike for the Friday expiration. We have multiple confluences across the Qs also reaching a potential rejection zone. We have the SPY also reaching a potential rejection zone. We've talked about the 560 level in the SPY in yesterday's video. At the start of the week, it is the strike price that has the last high positive gamma. We already knew at the start of the week that the market will struggle to hold above 560. Today is the first close above 560, so that will change a lot of the gamma exposure for the rest of the week. But without getting too ahead of ourselves, I want to dial in now and just focus in on the SPX for today. Let's start by taking a look at the 10 a.m. gamma exposure profile. So this is the QTA Discord. This is not the public section, so this is what's available to the gold members. I'm referencing the SPX data channel right here, and I'm just scrolled up to the 10 a.m. prints. As you guys know, this is my favorite timestamp for gamma exposure. It's 30 minutes after the markets opens. So just after a lot of the dust has settled, we have our P1 strike. So this is our strike price with the highest positive gamma. And then we have our N1 strike. It is the same from yesterday at 590. This is our strike price with the highest negative gamma. And then we have 5600, which is our absolute gamma strike. If we were to come over to this chart and turn on the 0 DTE GEX levels, I went ahead and just plotted those on the chart to save time for this video. Sometimes I like to draw these levels out while I'm recording the video just so you guys can see the process, but I think it's pretty simple. 590 and 630. That's coming right from here. 630 and 590. Our absolute gamma strike is 5600. It's already on our chart from the Quant Trading App script. In this case here, the Friday expiration absolute gamma strike happens to also be the same absolute gamma strike on the 0 DTE profile. The reason the QTA script is using the Friday expiration is because this is being calculated from pre-market, and 0 DTE gamma exposure fluctuates pretty frequently. So if you're having a static level on your charts, about 30 minutes or sometimes 40 minutes after the market opens, the absolute gamma strike might no longer be here. For the Friday expiration, however, it takes a really large move before the absolute gamma strike will shift. So if you're looking for that real-time shift in gamma exposure, that's where we have these channels here, or you can access them obviously on the gamma exposure tab right here on the websites. For those of you that want more frequent increments in the updates, this is going to update every 15 minutes for the gamma exposure profile. And then we also have the SPX Trade Engine that's going to print out this graph every 5 minutes for any changes in the absolute gamma. So just by looking at this chart here, we have this rejection at P1. Here is 630. We talked about 590 yesterday. Look at where the market ended up coming down to. We already addressed some of the additional confluences on some of the other symbols like the Qs. So let's just pull up the NASDAQ. We can see right here, this is also the absolute gamma strike for the NASDAQs. It's always a good sign if the SPX or the SPY is at a key support strike, the same time that the NASDAQ is also at a key support strike. In isolation, if the only thing you had on the chart was the Quant Trading App levels and you were aware of the highest positive gamma strike for the day and the highest negative gamma strike for today, and you use these as your resistance and your support, take a look at the opportunity on this chart. If you understand supply and demand zones, let's just say you drew out this demand zone here from yesterday, and we're going to disregard this wick for now just to really zero in and dial into this demand zone here. And let's just say you had this drawn out from yesterday. All of this price action occurring right in this zone here yesterday, right above this highest negative gamma strike also from yesterday. We're now combining multiple ways of approaching the market. We have a demand zone for you supply and demand traders. We have a data-driven approach from the Quant Trading App Quant levels. We also have these gamma levels on our charts. all of which takes not even 60 seconds to apply on your chart, by the way, because the QTA scripts are doing a lot of the heavy lifting. I'm just manually drawing in the P1 and the N1 strike. You can eyeball this demand zone here from yesterday. Now, to bring things really together, that's why the SPX Trade Engine was developed, was to bring all this information together onto one feed. So what we're going to do now is take a look at the playback of all of this information that happened throughout the day. So this is the very start of the day, 5 minutes after the market opens. We have the power strike up here, which is 640. This has been addressed in the previous videos, but if this is your first time seeing this, this is a proprietary quant trading app level. It's trying to assess where it thinks the market will want to close towards the end of the day. Within the first 15 to 30 minutes after the market opens, however, it's still recalibrating. It is reading the data, so it's not something I would put much weight on at the start of the day. However, we do know when the power strike is pretty far away from the opening prints, we tend to see a pretty large move for that day unless it pulls back, and sometimes we will see that it will latch onto the absolute gamma strike. Whenever the power strike latches onto the absolute gamma strike, that strike becomes very powerful for the day, and that's why it is called the power strike. It is called the power strike because it's trying to give a gauge of where it thinks price action will be during power hour, but if it latches onto any significant strike throughout the day, it makes that strike a very powerful strike. So I'm going to play this out now. We see at this point, it's still very early in the day. This is now 10:05 Eastern time. So 35 minutes after the market opens, the power strike has now dropped down to the absolute gamma strike. At this point, I still don't think there's really much of a clean trade, at least based on this graph here. We can see what happens. Price struggles to go higher. It ends up being pulled back. The power strike lining up with the absolute gamma strike. At this point, this can be considered a magnet. The purple dash in the background is our absolute gamma strike. So this is 560. We already know what the power strike is, as it was just explained. As we continue to play this out here, we end up getting a push off of this level. However, the power strike did not jump up with this move. The absolute gamma strike did not jump up with this move. Now, if these levels were maybe just 5 or 10 points away, so let's just say both of these levels have moved up to about here, that's fine. It's pretty much within a 5 to 10 point range of the current price, but the fact that it's so far down below here, this is about a 25, almost a 30 point drop from where the current price is at this point in time. That's pretty far away, and that's something that we can clock or take note of, because what's important here is we are now hitting the expected move for this 15-minute time frame. That's what this zone in the background is. This green zone up here and this red zone that's moving with price is showing what the expected move is for each 15-minute time frame. So within 15 minutes, this is saying that the SPX just made a move that is at the expected range for this 15-minute candle. We can interpret that as we're now hitting resistance. On top of that, what do we have? This is P1. We already know 630 is the highest positive gamma strike on our chart. We are now hitting the expected move for the open. At the start of the day, the expected move was about 26 points. We are hitting over 26 points for the day. In the background here, what we can't see, this is also telling us this is the strike price with the highest amount of call volume. And we can double check this from the gamma exposure profile. So this is 10:45 a.m. Eastern time. I've gone back to the SPX data page, so let's just scroll down until we find that time at 10:45 Eastern time, which would be right here. We can see a lot of high call volume, as that is what these blue peaks are. Behind this strike, there's another peak right here. So this is a lot of call volume coming into this 630 strike. We can see that not a lot of positive gamma has grown past the P1 strike. When we layer that with the context of where we are on the charts, we are now at the Quant Trading App intraday zone. We are also at the Quant Trading App weekly resistance level. We also know where the NASDAQ is at this point. We also know where the SPY is at this point. So what can a trader expect would happen with price action given all of the context and confluence in addition to all of the data lining up at this strike? The power strike's down here, the absolute gamma strike is down here. These two tend to act as a magnet whenever they latch onto each other. We're hitting the expected move for the 15-minute candle. We are hitting the highest positive gamma strike. We are hitting the strike that has the highest amount of call volume. We are hitting the expected move from the open. We are at the Quant Trading App resistance zone. We are at the Quant Trading App intraday zone. So let's continue to play it out. We get a rejection. Now, there's no way to know we're going to drop all the way right back down to the power strike. That's something that's pretty crazy to see. And it's not always going to work out that way. Obviously, everything is not always going to work out the same way. Each day, the market teaches us something different. but these patterns do repeat themselves. But what happens now? The market has just hit this red zone down here. This is now hitting the expected move for this 15-minute time frame. So the expectation would be we're not going to go much lower, at least within the next 15 minutes or so. And if we do, price is probably going to retrace back to this strike, because as long as these are latched onto each other like this, we can expect this to be a magnet. We'll continue to play this out. We see we got a little bit of a relief bounce. Price struggled to go much lower. Now we end up being choppy around the neutral strike for today. As new information is coming in, we can still see that the power strike and the absolute gamma strike have not moved. Price ends up going a little lower, but at this point, we cannot breach the highest negative gamma strike. This is also the 1 sigma range, as this has moved up right here. So this is just saying what Quant Trading App is doing is analyzing multiple days of price action and trying to find where is the 1 sigma range for a day such as today. What this is saying is usually price does not go past this range, which is pretty unique because we can see that the 1 sigma close is actually lower than it. Because these levels are dynamic, because it is constantly analyzing multiple days of data within these 5-minute increments, it is providing additional levels. So if you were not sure if you want to act on a trade just because we are at this gamma level, this is also providing an extra context for you so you can have a little bit of security by saying, hey, 590 is no longer just the highest negative gamma strike. It is also the 1 sigma range according to Quant Trading App for a day like today. As we continue to play out, we also know that this is our magnet, so maybe price is going to want to come back to this zone. We can see that the power and absolute gamma strike just stayed latched onto each other as we're just consolidating around the neutral strike here. And then nothing really, I think, of that significant to take place. So at this point, we can see the absolute gamma strike did jump up to 630, which was still our highest positive gamma strike, but then it immediately dropped right back down to the power strike. The power strike did not jump up with this. Let's continue to play this out. We can see price comes back down. We hit this lower end here. We hit this lower end here, and then we end up just chopping until we had this little pop at the end of the day. The power strike never ended up participating in this jump towards the end of the day. There wasn't that much time within the last 15 or 20 minutes of the market for it to have enough information or data to actually partake in this jump. And as addressed in some of the videos before, that last 10 to 15 minutes, sometimes we see these random 10 to 15 point moves in the SPX. It could be any type of portfolio balancing that's happening. It could be a random large purchase or sell order that could be coming in from a large institution. The rumor was back in 2020 that it would have been some sort of quantitative easing. It was the Feds. There was also some speculation regarding these last minute spikes up or down. Most of the time it's up during a bull market. So most of the time we can disregard that last 15-minute candle. I like to close out a lot of my pinned candles about 10 to 15 minutes before the market closes, just to avoid any of these random moves that can throw a wrench in a winning trade. Now that the full day has played out and we have all the context for the day, I want to point out some of these significant setups or trade opportunities here. Starting with this one, we hit this expected move for this 15-minute time frame with all of the confluence that was mentioned before, and we get a rejection right back down to where? This powerful strike of 560, which also coincides with the absolute gamma at that time. And that's what the purple dash level is letting us know at this time. We're seeing the absolute gamma change later in the day, but at this point in time, it was right here. So this is expected to act as some sort of support. It is hitting the expected move right here. That's what this light red level is. It is also hitting the powerful strike. It is also hitting the absolute gamma strike. It was also the absolute gamma strike on the NASDAQ, etc., etc. A lot of confluence here, a lot of confluence here. Later in the day, we get a little bit of bounce. We come right back down to this level. We also get another bounce, and then price goes all the way up to where? Here's where we hit our 1 sigma close for the day. So this ends up acting as a resistance, which was pretty much right below the expected move from the open, which is also right below that key strike of 650. And we end up getting another rejection right back down to here. I think moving forward, to keep these videos pretty concise, I'm going to be focusing on the SPX Trade Engine graph, as so much of the context is right within this chart, and I can do a video just on this in itself, as it covers so much of the information. It has gamma exposure built into it. It has quantitative levels from the sigma closes and opens, and all of these levels are being generated from Quant Trading App, some of which are proprietary levels. some of which are being pulled directly from the options chain, like the highest negative gamma strike, or the strike price that has the highest call volume, or the highest put volume. That's what PV1 is saying. At this point, which would be the end of the day, this was the strike with the highest amount of put volume. So moving forward, again, this will be, I think, the focus for a lot of these videos, as I could probably make these videos about half the length. This is also in beta, by the way. There will be improvements and significant improvements that's going to come to this. There's going to be a lot more visual cues to make it even easier to read. As you guys can see at this point, there's so much to cover. Lastly, as I mentioned at the start of this video, I just want to address a trade in which I took, and that was this broken wing butterfly that I took around the low of day. The expectation was that the market was going to bounce. I tried to centralize it around where the absolute gamma strike, which was also the power strike. My expectation was that the market was going to pin somewhere around the power strike. I was expecting the power strike to maybe bounce a little bit back up to around this area. I did not want to go too far out the money. At the time in which I opened the trade, this is on the ES, I was paying a $24 debit for the trade. If you trade ES options, you know the debit that you see here, by the time you submit the order, it's only going to take half of this in margin. So in other words, if it says it's a $20 debit, it means it's only going to cost you $1,000 in margin, versus if you buy a $20 butterfly or a $20 call option in the SPX, it's going to cost you $2,000. It's half the margin. So that's why you guys can see that the max loss over here is $1,200. That is half of this debit. By the time the market closed, the trade was going for $26.85. So this is where the ES is now. I didn't get an exact pin, but it closed right well within the range in which I was looking for. So obviously the market is closed, so I no longer have any of these open, as it was a 0 DTE trade. Scaling up and scaling down into these trades are pretty nice. I'm starting to fall in love with the ES futures. I like the fact that it's actually half the margin. The biggest caveat is the fact that the commissions are a little higher, but I do like the fact that you can trade these options after hours. I do like trading spreads, so I really like the flexibility of them, and I like the fact that it is half the margin, because it means I can get options that are a little bit closer to the money, which inherently gives them a better probability of success, as going too far out the money sometimes is not a great idea. So simple enough trade. I opened up around 11 a.m. so right around here, just as I saw this level was holding, and my expectation was that we're either going to continue to hold around this level for the day or go a little bit higher. Was not really fearful that we were going to go much lower, so that's why it is structured this way at this point. So the logic being, we're going to hover around here, not really worried that we go much lower, but if we went really high, I didn't really have any risk to the upside. If the market did break down below this key power strike here, and I did see us start closing below this level, I would have realized the losses, as I would not have wanted to have such a drawdown on a trade like this. But today there wasn't really much of a worry. I also gave the trade a little bit of room to the downside, which is why when I opened it, the SPX was around 620. So I had about a 10-point wiggle room to the downside for my break even at expiration. And this is the way, or at least the style in which I really like to trade. I like to give my positions a little bit of wiggle room to the downside, which is why I prefer butterflies. I like the fact that it has the asymmetrical returns if it ends up being a pin. Another trader might sell puts below this level. That would be a great approach also. Selling an at the money put or something that's slightly out the money is a decent approach, but it's also aggressive. Selling an out the money put in a situation like this is a really high probability of success. Or you can just buy a call, but the problem with when you buy a call is if the market is pretty flat for a good bit of time, especially if it's 0 DTE, even if you're right and the market does bounce, you sometimes go a little crazy, or at least I do, just waiting for the move to happen if it takes too long. So in days like this where I don't have massive conviction in a rapid or a very aggressive momentum-based bounce, I'd much rather go with something like a butterfly and not have to worry so much about the 0 DTE time decay, or even better, use that time decay in my favor. And this would be in my favor if the market was just to be choppy and time was to pass by as it remained around this strike of 620, which was about the equivalent of the power strike of 600 on the SPX. Guys, if you enjoyed this video, let me know in the comments down below. Like it, share it. Links to Quant Trading App is in the description down below. Links to some previous videos is also in the description down below. Thanks for watching, guys, and I'll catch you in the next one.